Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, stocks in the U.S. were up again on Tuesday as Americans voted in the midterm elections. All three main indices higher, the Dow by more than 1%, the S&P about 0.5%, the Nasdaq similar. Election results coming in now, and the futures are a mix. What's the story in the global equity markets?
In U.S. market yesterday, the S&P 500 rose 0.6% and the Nasdaq added 0.5%. The Dow Jones Industrial Average rose 1%. Investors' optimism had built ahead of the midterms, which could see a shift in the control of Congress and offer signals about the next presidential race. The Democrats' narrow control of the both chambers is up for grabs. Nonpartisan analysts are projecting Republicans will take control of the House of Representatives, leading to a divided government and potentially limiting the scope of the Biden administration's legislative plan. Asian indexes dropped today. Japan's Nikkei fell 0.6% and Hong Kong's Hang Seng lost 1.6%. The Shanghai index in mainland China also declined 0.4% as of 3 p.m. in Seoul time.
Right, we'll come back to Chinese stocks in a minute. Here in Korea, stocks higher again, as well as the dollar comes off its recent peak, giving the Korean won a boost. Another gain for shares of Naver and Kakao, with strong buying by foreign investors and institutions. Slight declines for the biggest companies in the biopharmaceutical space, though. Tell us about the domestic market.
Domestic markets advanced today over 4 straight trading days thanks to U.S. markets recovery and $1 exchange rate declines. U.S. markets began to pick up from early this week by the expectation of market-friendly Republicans' advancement in midterm election. And there is a hope that U.S. government's weakened fiscal stimulation after midterm election would stabilize U.S. inflation, and then U.S. Fed will pivot interest rate hikes earlier. But it is true that uncertainties in domestic bond market and $1 exchange rate still dominate market. The benchmark Kospi advanced 1.1% and Kosdaq marginally gained by 0.2% today. In Kospi market, domestic institutional investors and foreign investors together aggressive both domestic equities, and that led market upside with net purchase of 760 billion won. Most of the large cap stocks advanced today along with market indexes rise. Samsung Electronics gained 0.3% and LG Energy Solution also rose 1.9% today.
Right, and Professor, there's been a rally this month in Chinese stocks, of course, in anticipation of an easing of the country's COVID lockdowns. Reports say China is preparing a COVID exit strategy. Today, shares were down, but the idea is there could be changes coming early next year. What do you make of the situation, Professor?
Beijing's strict zero COVID policy is giving a big economic pain to Chinese citizens and global trade. Beijing has grown concerned about the cost of their zero-tolerance approach to smothering COVID-19 outbreaks, which has resulted in lockdowns of cities and whole provinces, crossing businesses, activities, and confining hundreds of millions of people at home for weeks and sometimes months in the end. But they are weighing those against the potential cost of the reopening for public health and support for Communist Party. As a result, they are proceeding cautiously despite the deepening impact of the COVID-19 policies. That indicates Chinese government begins to set up the timeline for easing its strict COVID policy sometime early next year. Domestically, Chinese officials have informed border controls for inbound travelers from abroad is relaxed, and retail businesses that the frequency of the PCR testing could be reduced as soon as this month.
We'll keep an eye on that. And Professor, we see finally that Korea last month had 677,000 more people employed than it did a year earlier. Most of these were among people older than 60, but for a fifth month in a row, the size of the increase was smaller. Do you see this recovery being sustained? What's happening on the job front?
Domestic employment keeps its recovery momentum, but recovery speed is reduced in October. That slowing recovery of the employment is related to Korean economy's possible recession amid high inflation. The number of employed people stood at 28.4 million last month, up 677,000 from a year earlier. This October figure marked a slight drop from the on-year rise of the 707,000 tallied in September. The new jobs were mainly created in the manufacturing, accommodation, restaurant, and healthcare industries, apparently on the back of easing social distancing rules. But we still see continuous weak job market situation for young workers. The growth was mainly led by those aged 60 and above, which accounted for whopping 460,000 of the on-year gain. The new job additions for those in their 20s only came to 28,000.
Right. It's interesting, reflecting a social phenomenon there, I guess, with the changing structure of Korea's society. But Professor, we'll have to look into that another time and leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Devin.